Good afternoon to you all, and welcome again to another edition of Analysts Insights. My name is Ranga. I'm joined today by colleagues, fellow analysts, and on my right, I've got Zimbos. Welcome to the show.
Thank you, Ranga.
Yes, it's been a minute.
Yes.
You are a regular to this show, and on my left, I've got Rufaro. Welcome to the show, Rufaro.
Thanks for having me, Ranga.
Thanks so much. So there's quite a lot that we want to discuss today, but maybe perhaps before we get going, we just want to share a little bit of statistics with the viewers. A lot of things have happened. Here I'm looking at a graph that I hope you'll be able to see on your screen. That's just showing you the relationship between the auction rate and the parallel rate. And what you'll be able to see is the growing disparity or growing gap between those two numbers, where the parallel market rate is certainly above 2,500 now. I've actually seen some trades that are happening northwards of 2,600. I don't know if I should say that, but we are analysts. Obviously, we look at whichever figure that are coming compared to the official rate, which I think maybe at the very best, maybe by Tuesday, it could be around 1,300, 1,400. And I was also looking at the graph of the parallel market rate versus the all share index. And I must say the market has actually managed to hold its own, where the parallel market and the all share are probably close to each other. And we'll talk about how the ZSE has performed and also the VFX. But in terms of our discussion today, let's talk about the numbers. Delta, it was a big day for our local markets. Whenever Delta is announcing, us analysts, we get so excited because over the years we've sort of associated it with, we see it as a mirror of what's happening in the economy. So starting with you, Simbi, so is that the sense you got from the numbers yesterday? And what's one major highlights of things that you noted as an analyst that you may want to share?
Okay, thank you, Ranga. Certainly, Delta serves as a barometer to certain fundamentals in the economy. And yesterday, I think it just got us thinking or gave us some homework to reconcile some disparities at hand, but of significance was the statistics that it recorded record high volumes ever in the lager business, and then the sorghum business. I think they surpassed the 4 million mark, 4 million hectoliters mark. A trend last seen in 1998, I believe. So I think those are some of the major issues that then have to get us talking and to really think where exactly do we stand as an economy. Yeah.
And Rufaro, what do you make of those record-beating numbers? And in your view, I know you had a post-briefing chat with some of the leading players at the organization. What sense are you getting as far as where the source of this massive performance is coming from?
Look, my intuition is that it speaks to growth in aggregate demand in the economy as a whole, and that can only happen if the economy is actually growing. So I know there's a narrative out there that because of some of the economic policies we have, the economy must be shrinking. But then, so that begs the question, who's drinking all this extra beer?
But is the economy growing? Before the show, we were just having a side discussion that, like when the economy is growing, you should feel it. You know what they say in weather report, like
Real feel.
the real feel. So do we have that real feel of growth?
I think it's in certain pockets.
Okay.
It's not across the entire economy. So you'd find out that consumer facing offering this type of products they can actually witness phenomenal growth. But I'm not sure if it's the same, if it's consistent across all sectors. I doubt that.
Okay.
So what we then need to maybe further unpack is what's motivating this certain sector to, what are the fundamentals behind the growth in these sectors, in consumer facing sectors. Yeah,
so I think, look, when you say consumer facing sector, what you're talking about is disposable income. So if there's growth in disposable income, it's hard to imagine a scenario where you have an economy that's contracting and yet disposable incomes are going up. And Delta is not an anecdote. This is data. We're talking about millions of hectoliters of lager beer sales at all-time record highs. And if you look at the trend for the last 5 years in carbonated soft drinks, it's also been trending up. So that's the genuine consumer demand. Where is it coming from if people aren't doing better economically?
Yeah, so I think maybe to help us answer that question is probably to say, okay, this is Delta, it's just one company. Mm-hmm. Are we seeing that same level of growth in other areas? So if another business was to report, it's obviously one of the jobs that tasks that we have as analysts to try and project into the future. Are we expecting this kind of a strong performance from other listed entities? So banks or other players, maybe Econet or an Inscore or a Zimbos, because it's probably when you've sort of aggregated all those players and you're seeing the same level of performance that you can make confidently say maybe the rest of the economy is growing. Are we seeing growth across the economy, across all sectors, or there are specific sectors that are growing? And when you look at the numbers, the economic performance numbers, are they speaking to the growth you are seeing in Delta, or it's an isolated case?
Okay. I wouldn't say it's an isolated case as such, because over and above maybe the economic performance, there are also other qualitative input to overall performance. Okay. But I would think there are certain sectors that are favored more. Banks released their results. I wouldn't say it was they outperformed to the extent that Delta performed. So it also speaks to certain dynamics which are not, it's not a level playing field. Some are enjoying more benefits from certain pockets of the economy. So I would think that maybe companies that are also largely facing the informal sector, they're going to be exposed to this outperformance, because there is we still have those dynamics whereby we have more than half of the economy unbanked, according to official statistics. So I think companies that are exposed to those sectors, they're also enjoying or then outperforming the
rest of the companies. Yeah. It's very interesting that she's introducing that element of how the economy is informalized and the extent to which different businesses are affected by that informalization. So we have got an informal and a formal economy as we speak right now. And to the extent that a business is facing or interacts with the informal sector, we are seeing performance filtering into their business because of that. But those ones that are still largely formal, they don't have that benefit. Is that what you're seeing? And
so also I think when you look at other companies that are listed and we try to unpack their numbers, like you mentioned the banks, for example, the regulatory risk is not the same across sectors. So you'll find that the banks, for example, they have all sorts of restrictions in terms of how they operate, from interest rates, right? Those are not set by free markets. So they are negative in real terms. So if I have Zim dollars in my bank account, my incentive is to get rid of them as quickly as possible, because even if the bank offers me interest, that interest is negative in real terms, and the purchasing power of my balance is going to go down over time. But in a scenario where interest rates were real and people could actually grow their savings by just keeping money in a bank, which is what they can do in a normal environment, a lot more money would be banked. It would there'll be. So the banking sector has all these handicaps. If you talk about the US dollar, they can only transact at auction, which is again not a free market rate, so it limits the volume of trading that happens in formal banking as opposed to outside formal banking. So if you look at the performance of the banks through that lens, they're going to struggle to do well because they've got all these handicaps. And a business like Zimbos, for example, as well, with the gap between the parallel market rate and the official rate being so high, what it means is if you're paying in Zim dollars, you're getting a significant discount. So that's going to have a huge negative impact on their margins. So if you analyze their numbers, they're not going to speak to what's really happening with consumer demand because of these distortions. So I think with the Delta, which is what I like about it, is you don't have, it doesn't seem to suffer from all these handicaps and distortions. What you see is pretty much what you get. And so it speaks to aggregate demand, which speaks to, how the economy, which is a good barometer of how the economy is doing in my view.
Yeah, because when you look at those numbers, you'd see that in US dollar terms, there's growth, and it speaks to the growth that you are seeing in the volumes. Revenue was up 19% to 713 million US dollars. It's a huge number. And operating income was up 13% to 140 million US dollars again. And just to underline the fact that the business is now operating mostly in USD terms, the dividend is a tidy 3 cents US, and those are really impressive numbers. And I actually tried to look at Delta and try to make some comparison with some of its peers in the region. In terms of valuation, on a relative terms, it's looking very good. Enterprise value to EBITDA 10 times. I'm seeing the likes of Zambian breweries at 13.4 and National Breweries at 10.7, and obviously there are others with a less demanding. And when you're looking at the EBITDA margin performance at 26.13, it's fairly competitive when you look at the rest of the African breweries that are listed. So it's actually a business that is actually doing very well. But again, the coming back to you, Simbiso. So what should we expect maybe going forwards in this economy? When you look at the results that have been released so far, you have spoken about the banks. We are seeing what the likes of Delta are doing. Where are you seeing excitement? Which ones of these sectors have got a very strong investment case on an overall position?
All right. I think maybe before I answer you, Ranga, as well, there's one statistic that I recalled, which was mentioned at Delta, that on average for the year, 67% of their transactions were in US dollars.
USD, yes.
And in certain quarters, it actually went to as high as 85%.
Okay.
So I just wanted to talk about maybe the value chain as well, in terms of that, in terms of who else is benefiting. So you'd find that if we take the average of 67% transactions in US dollars, digging deep further into that, they highlighted that most transactions are at their depots and stuff. So, but you also have retailers who are pushing their product, but that retailers are pushing it through. They are being affected by the the exchange rate, they then push through local currency. So you'd find there are certain companies that are then ultimately not really benefiting from this from this situation, if I may say. So you'd find most retailers are also at risk, as they are not enjoying the higher percentages in transactions through US dollars. Actually, I think in the economy, the behavior is that you swipe at the retailers and then maybe use your cash somewhere else. So I just want to mention that in terms of the overspilling impact, in terms of outlook and where there is excitement, I'll still maintain the fact that companies that have exposure to the informal sector would are set to outperform the market, because I think even what Rufaro mentioned, regulatory risk in the formal sector is also hampered by regulatory risk, and amongst other things. So their chances to maneuver is quite limited, and be as flexible as they could as they would want is quite limited. So for those who are exposed to the informal sector, they're set to enjoy the benefits.
Yeah, I just want to also add, in terms of on the consumer side, in terms of demand, what's true today, which wasn't true 5-10 years ago, is that you have Faroon beverages in the market that's pushing Pepsi and Pepsi brands, and they're quite popular in the market. You see them everywhere you go. People are consuming these things, and yet, in spite of them doing quite well, Delta's enjoying record high volumes.
Yeah.
So what that speaks to is that actually the demand for these products, these carbonated soft drinks, has gone up quite a lot.
Yeah.
The pie is actually grown so that it's big enough for Delta to be doing record volumes,
Yes.
and
they
for
even
Pepsi to be.
there's still space.
Yes.
That's why they're increasing capacity.
So to the naysayers on the economy, I beg the question again: who is consuming these beverages? How are they able to consume more in a shrinking economy?
Yeah, it's a very interesting discussion, but it's good to see these listed businesses reporting some good numbers. Also, one thing that one of the questions that was asked to them was with regard to the Victoria Falls Exchange, the migration that we are seeing, where quite a number of our businesses that are listed are moving away from the ZSE. And they're very, very clear that right now they don't have the intention of moving their listing from the Zimbabwe Stock Exchange, and for one reason or another. What do you make of that? As an analyst, do you think it's okay? Maybe just your reaction.
I think they're in denial.
Okay.
The fact of the matter is, if you look at the split in the economy between the US dollar and the Zim dollar, according to the government statistics agency Zimstats, it's 76-24, which is not what it was 6 months ago, 12 months ago, or 3 years ago. Mm-hmm. So it's moving steadily in one direction. We're dollarizing. So it's conceivable that this time next year it will be 90-95% USD, 5-10% Zim dollar. So what will you still be doing on the ZSE in an economy that's 90-95%? The writing is on the wall. I don't understand. They talk about liquidity. There's more liquidity on the ZSE than the Victoria Falls Stock Exchange. Okay, that's true. But what are you doing with Zim dollar liquidity? Every day, the list of things that the Zim dollar is useful for is shrinking.
But Carol, when you look at an investor, one on the VFX and the other one on the ZSE, who is most likely, even if let's assume they're a foreign investor, who is most likely to get their 20,000 USD value in London or in New York, maybe in the next 3 weeks, between one that owns some shares on the VFX, which are hardly trading, and the one that is has got some shares on the Zimbabwe Stock Exchange. Yeah, they're trading in Zim dollars, and you've got the you have to exchange from Zim dollar to USD. Who is likely to achieve that?
So if you're sitting in London and you own Delta shares and you sell them, good luck getting hard currency at the auction.
But from the open market,
and under what governance framework are you trading on the open market, sitting in an office in London?
But Rana, I wanted to say, is the liquidity aspect not from the fact that the major institutions, like institutional investors who support the stock exchange, they are still primarily dealing in ZWL. Their contributions are in ZWL. Okay. So if a company like Delta moves over to VFX, it means that a lot of institutions will be limited in terms of the capacity to trade in the volumes that they trade from a ZWL perspective. Isn't it what they were trying to put across to say the major traders are institutions, so if they are still predominantly dealing in ZWL, there is no need for us to migrate?
Yeah, so it's that, and also the fact that there are some share options. Yeah. I mean, you saw that number. I think there were an additional 8 to 9 million shares to their shares in issue. And if you are on a market that is not trading, how are these people going to actually benefit from there? And talking about that, I mean, this example that we were trying to look at, do you know that right now there's a massive overhang of scrip on InScore? There are quite a number of investors that had moved in fact, there were some trades that were happening where people were selling Deltas or Econet, buying InScore because InScore is going to be listed on the VFX and hoping that when it's there, they'll be able to. And those investors are stuck.
So I think we're in a transition. It's analogous to where we were in 2009.
Okay.
So when the market was reopened in February, the volumes were very thin. Okay. Most institutions didn't have US dollars to trade.
Okay.
And so it was a very quiet market for the first 6 to 9 months. But by Q4 2009, the market was back to normal in terms of its vibrancy. So I think we're in a transition where, we're at 76.24, we are dollarizing, and I think it's only a matter of time before the pension funds start saying to their customers, look guys, if you're getting 70-80% of your revenue and income in US dollars, why are you paying all your pension contributions in Zim dollars? Why, let's not, why don't you also make your contributions in the way that you're earning? And eventually what will happen is there will be a transition in the institutional fund manager environment where right now they're mostly receiving US dollars that will then reverse and they'll be mostly receiving US dollars. And I think my prediction is that by Q4 this year, we're going to see volumes improve significantly on VFX. And then we will be having the opposite argument where we're saying all the liquidity is on VFX, there's no liquidity on ZSE because the economy will also be more dollarized than it is now. So we're in transition.
So given that scenario, isn't the argument or the push from us as capital market players be one where we say to the policymakers, just dollarize the ZSE? Because these businesses, even the ones that are still listed on the ZSE right now, they are seeing 70%, 80, 85% of their revenue being in USD terms. So they've got capacity even to pay their investors.
They're paying dividends in USD.
So maybe we don't have to force them to move to VFX. Maybe VFX should just continue with what they're trying to do, attracting new listings, especially of the resource businesses, the mining businesses and others that are seeing the value in that. And then just say, you know what, the ZSE is dollarized. Don't you think it's a better proposition?
To me, it's a difference without this distinction. VFX and ZSE one company, they use the same platform. It's just, it makes no difference.
I think the other difference on the VFX were the incentives.
Okay.
So there would be need to have a look around those incentives that they flagged initially to see can then they be also extended to ZSE.
Okay.
But yeah, it's a possibility.
So maybe just in winding, we'll just look at the recent announcement from the Minister of Finance. Maybe just to say, starting off with you, what are the major takeaways? What are exciting? Maybe one exciting thing or two that you say maybe this could take us a step forward. So maybe just to run down the 7 that are there. There's the 100% retention of domestic foreign currency earnings, adoption of all external loans by the Treasury, enhanced foreign exchange auction system, lifting of all restrictions on importation of basic goods, supportive interest rate environment, promotion of the use of the domestic currency by government, and obviously the gold coins.
Yeah, I think the third one, which is enhanced foreign exchange auction system. I'll throw the question back to you.
Okay.
Is the Dutch auction system coming? What's your understanding of that?
Okay. I know Rufaro wrote a lot, has been writing a lot about the auction, which is not an auction. And I think the pure Dutch auction system, that's the one they are proposing. So do you see that as some progress?
If they do what they say, it's progress. Because so far, what we've been calling an auction is basically a managed exchange rate, where somebody or a committee at the Reserve Bank decides what the rate is going to be every Tuesday, and they tell the banks. So if we actually get to a place where it's a legitimate auction, I think that's floating the currency, and that's a fantastic development. But unfortunately, there's a historical precedent where we make these announcements. Many years ago we had the first version of the interbank market. It worked like a willing buy, willing selling market for some time, and then there was an intervention and became a managed exchange rate. Then the auction was launched, and it was very close. The gap between the parallel market and the auction was very close. It was close to being a legitimate auction, and then it just became a managed exchange rate. So, is this what's happening again, where it will be liberalized, float for a few months, and then go back to being managed? I don't know.
In terms of excitement, I think they are exciting policies. It's an exciting submission, and what's important, I would agree with Rufaro, is consistency and implementation, so that we don't have back and forth or roundabouts or turning around to change what would have implemented or suggested. But they are quite good initiatives that are being proposed that will make a difference.
You have it. The analysts think there's some positives to be gleaned from the announcement. I think what needs to be done is to make sure it's implemented to the rightful conclusion. Thank you so much for watching this show. It's been a pleasure to have you on board. Let's have your comments on our comment sections and suggestions, anything that you want to know about our capital markets. It's been a pleasure to have you around. Have a good day. I'll see you next time.